Good evening, everybody. It is already mid-March, just Christmas a couple weeks ago. All right, we've got the privilege to have Nathan Tucci with us tonight. He's a young trader that has been using techniques very successfully, analyzing the market momentum using mathematics. So his concept kind of fits in with what we like to look at, so this might fit very well with what you're doing. But his philosophy is that price is what you're buying, not anything else. So you use price as your price action as your trading strategy. So with that, Nathan, welcome to the Candlestick Forum. We're very interested in seeing your techniques.
Thanks so much, Steve. Really appreciate it. And we are really happy to be here presenting with you and your group of traders. Certainly a privilege anytime you get to hang out with a group of traders. I like to say that, traders are kind of crazy. So if you can find a group of 500 of them, that's pretty rare. You better take advantage of it. So thanks for having me again, and welcome everyone. My name is Nathan. I'm from Winner's Edge Trading. And we are currency traders. I'm not sure how many of you in here trade the currency markets or have traded the currency markets, but it's the market that we prefer. And what's nice about the kind of techniques that we believe in is that it doesn't matter too much whether you're trading Forex or not. They're still very applicable regardless. But just a note, as I kind of go through some of this stuff, I will be using Forex terminology, saying words like pips, and then using pairs as the instruments for examples. But that doesn't mean, again, that it's not applicable. You just have to deal with my Forex language if you're not very familiar with the currency markets. But what I want to talk to you about today is the idea of using the trend momentum combination to hit bigger winning trades. I think that I can safely assume that everyone in here is interested in hitting bigger, more profitable winning trades. At the end of the day, what it comes down to as a trader, whether you're making money or losing money, is what your winners look like, what your losers look like, and how many of each you have. And so our goal as a trader is very simply to hit as many winners as we can, and for those winners to be as big as possible. And we have a specific strategy that we teach is a very basic fundamental strategy, which I've found tend to work the best. And basically what I'm going to go through today is how to trade that on a step-by-step basis and kind of help you make sense of a fundamental strategy that can work for you and should work for anyone in any type of market. The idea of trading with the trend, I'm sure you've probably heard that about 3 million times if you're anything like me. What I've commonly found is that, every educator in the world, or at least most of them, will throw that phrase out there, trade with the trend, but it seems that it's very rare that anyone actually tells you how to trade with a trend. And so that's what I'd like to attempt to accomplish today. I only have about 40 minutes or so, but I'm going to attempt to do that to actually show you what it's like to trade profit with a trend, or what that looks like or should look like, so that you can go and do the same. First of all, I just want to describe the problem with trading the trend first, because this is something that for some reason is commonly overlooked. And that's the fact that just because you have a trend doesn't mean it's easy to trade, even if you have the trend direction correct. In other words, you might call this an uptrend and you'd be right, but that doesn't mean that there's 400, 500, and 600 pip swings to the other side. So even in a trend, it's still very easy to lose trades. And certainly as a trader, there's nothing more frustrating than, having the direction right and still losing a trade. Unfortunately, it happens all the time. It still happens to me all the time, but a lot less than it used to. So at least I'm making progress. But one of the most fundamental things I've found about why I had so much less success before I really dove into this trend thing was that I was using a vague definition of the trend and saying, as long as the trend's up, I can buy and win trades, and as long as it's down, I can sell and lose trades. But I wasn't really capitalizing on the fact that within an uptrend, there's strong up moves, and within an uptrend, there's strong downward moves, and you just have to pick the right moves. So the way to fix that is to understand market structure. And so instead of just having, like what I talked about as, a vague definition of the trend, instead, you really understand market structure and how to pick the spots in the trend that are going to be most profitable for you. So instead of just having that vague definition and buying whenever there's an uptrend, you learn how to trade that combination of when the momentum is picking up in the direction of the trend. So instead of trading those other spots that we talked about where the market's swinging 400 pips against you all the time, instead you begin to learn how to pick these spots in the market. And once you determine a trend, and not only a trend, but you determine the upswings in an uptrend and the downswings in a downtrend, they're really significant momentum portions of the trend that are responsible for building that trend, and you trade in those zones, then all of a sudden you're able to start making some really good trades, and more importantly, you're able to capitalize on that incredible movement that happens within a trend. And that's the whole point of trading a trend. Sometimes you hear people talk about trading the trend, and then it's like a scalping strategy. And I guess maybe trading with a trend can add some kind of probability to a scalping strategy, but the whole point, in my view, of trading with the trend is capitalizing on the fact that there is a trend, that it's going to move in a significant direction for a significant distance, so that can be taken advantage of and add dollars to your trading account. If you're just scalping, then you can scalp on any kind of movement. It doesn't, the trend, you're not leveraging the movement of the trend in any way. But that's what we want to do. We want to use the trend and leverage that trend to take advantage and hit good winning trades. Now, what we call this strategy is the double trend trap strategy. And at the end of the presentation, I'll shoot you guys a link. We have a free report that explains this step by step in some detail. But that's what I want to go through today, because in my eyes, this is a very simple and basic way to understand the most powerful way to capitalize on a trend. And whether you're a trend trader or not, I think that you can benefit from this, because it really shows you how to break apart the market structure step by step in a really simple way. And again, I highly encourage you to download that report. I'll give it to you at the end. So basically what we want to do is we want to define the trend. Then we want to understand what the actual trading opportunity is within the trend, because you can do all kinds of analysis and talk about the trend, but until you find an opportunity to trade it, you're not going to make any money. And then finally, of course, we want to trade that momentum that is moving the trend to new highs or new lows, depending on what kind of trend it is, of course. So what I want to do is first walk you through a recent live trade that we took. This is a trade that we took live in our trading room, and some of our members got to enjoy this trade. And the reason I'm going to walk you through it is because it happens to be a perfect example of how this momentum trending aspect works. And I'll kind of give you the disclaimer before I go into this trade. It's a perfect example, and certainly we don't hit trades like this every day, but it makes it really easy to show you how momentum can work in the market once you've defined a trend and you've capitalized on the opportunity within the trend. So our first step that we're going to do is we're going to define the trend. I've said that I think like 10 times already. We've only been in the presentation for 10 minutes, so you're going to hear that a lot. But it's so important. It's so easy to overlook that understanding the trend can really be capitalized. We have a tool that does this for us. You can actually see it there in the right corner of the chart. It tells me if the trend is bearish and that it's confirmed already. And so it makes trading for our purposes a lot easier because the tool does that. But you don't need the tool. If you want the tool, you can get it. It's on our website. It costs a few dollars, and it's worth it. But you can do this without the tool. It's pretty easy. Your eyes can see it. But also, if you want the kind of the simple rule, then you can use a 136 EMA, use a high, low, and a close, and then a 34 EMA, high, low, and a close. And what you do is if you put those two sets of moving averages on the chart, what you'll get is two nice waves that actually correlate with each other very nicely. And so how we use those is that we put them on the higher time frame than what we're looking to trade. So if we're looking for an hourly trade, those would actually go up on the higher time frame because we want to follow the trend that's more, more authoritative, that has more power, so that we can take advantage. So again, first step, we're defining the trend. If you put those moving averages on one time frame up, you'd see that price falls below both of them. And then if price is between both of them, of course, you have kind of a sideways market where you're not ready to see a trending opportunity quite yet, but they correlate very well, and it's a really easy way to spot the trend quickly and know what kind of market movement you're looking for. Next, what we do is we identify the opportunity. So what I've done here, very simply, is I've zoomed in on the up leg, because anytime that we have a bearish trend and the market begins to move up, we automatically know that there's a selling opportunity because we're looking for that continuation of the trend. So if I back up, you'll see at the end of this move here, we're starting to build upward. And so all I've done is I've grabbed that section, I've zoomed in on it, and then I drew a trend line, because I know that if that section of the market, or if that correction breaks back to the downside, I have a really good trade opportunity. And sometimes what I'll see is that people have trend lines everywhere. They'll be drawing trend lines left and right. There's 3,000 trend lines on their chart, but a trend line doesn't really mean anything unless there's a specific intent behind it, because you could draw, again, a million trend lines, but unless they have a specific purpose, then you're not going to be able to trade all of them, and if you do, you're probably not going to do very well. So we have a specific intent. What we're doing is we're drawing a rough trend line on the counter trend move, so that when that trend line is broken, it's a signal to tell us that it's actually done with the correction and moving back in the direction of the trend. And yeah, I'll go through these questions, guys, by the way, at the end. So if you have questions about the strategy, I'll walk through those at the end. But very simply, we're looking for a move in the opposite direction of our trend, and we're drawing a trend line on it. So if there's a counter trend portion, you know right away that there is a potential opportunity in the market. Doesn't really get any simpler than that. If the market's moving down and it begins to move up, well, then you better wait for an opportunity, because it could move down again and could be a great opportunity for you to trade. So pretty simple. Now, the next thing that you're going to do after you draw that rough trend line is you're going to wait for a break, because as soon as that trend line is broken, you know that this currency pair, in our case, but it could be any type of instrument, as soon as it breaks that trend line, there's an opportunity here where you can leverage this trend and catch the opportunity that it's going to move all the way down and continue that downward trend. And this is where a lot of people get caught up, because there's a million different things that you could go into here in terms of filters and all that kind of stuff. But the moral of the story is that the market is not going to be as clear cut all the time, where you can just draw a trend line, it's going to break the trend line, and as soon as it does, all of a sudden it's going in the other direction. And so many times what will happen is you'll get false breaks and false moves, and then the market will actually just go into a deeper correction before it goes back to the downside. And so your stop loss might be a good technical safe stop loss where it's above the recent high, but it'll just correct a little bit higher. It'll stop you out along with all the other people who have their stop losses there. And then it'll go and continue right down the trend and go for 500 or 1,000 pips. And you could have had this amazing trade, but instead you're sitting on the sidelines with a loss because you got the direction right, but your timing was a little off. And so that's where this momentum aspect really comes into play. What we've done is taken a very basic strategy where you're looking for these counter trend moves, and we simply said, okay, well, let's wait, because the whole reason for trading a trend in the first place is to catch these impulsive moves that run for a long period of time. So let's create basically what we call a momentum filter and really wait and be confident that this move is continuing. And what you'll happen, or what you'll see, is that people don't want to wait. They don't want to wait for a confirmation that a move is really going in their favor, because then they'll say, oh, we're too late on the trade. But what we've seen over and over and over again with our students and our subscribers and in our personal trading is that the people who are so worried about, getting in early or not missing a trade are way over trading, and it's causing mass amounts of losses, which are totally unnecessary. So another huge advantage of the trend is that it really doesn't matter if you get in a little late, because you're going to be able to ride that trend and take advantage of it. So you can either take 5 qualified good trades where the trend can really move you in the right direction and hit some of those winners that we're talking about, or you could take 20 trades or 30 trades where you're kind of guessing and trying to get in early and you're taking all these losses. And so what we've determined is that if you wait for that momentum and you're really specific about the trades you're going to take, you take less trades, you win a higher percentage, and at the end of the day, those winners add up to be a lot more in your account. And so for you and for me, I'm sure for every trader in this room, the idea is to grow that account. It's to hit those winners. So this is an example of something that happens almost every break you get, is that you get some kind of retracement. So we wait that out, and we don't jump into the market. We wait for the momentum to continue. And what you'll see here is that after a little correction, a few bars, the market picked back up, and you see significant momentum. From where the price turned at the top, you have a really nice run, a very small 2-bar correction, and a continuation. And again, we have this tool. It's the same tool that defines the trend, that puts an arrow on our chart that you see there when it finds enough momentum in the market, basically, where it says, okay, this trade is very likely to continue the trend. And so when it sees that, it puts an arrow on the chart, and we know that it's a confirmed entry. And there's a few things to note here. Number one, another thing that we like to see is that the bearish move moved below the most recent touch before that. So if you look here, I don't know if you guys can see my marker, but if you look here, clicking through, you can see that there's a touch here as we move through this trend line, and this broke all the way down below that. Because a lot of times what you'll see is that it'll go above this level, and again, it'll continue to correct upward. And so it broke all the way through this bottom. It shows momentum. There's, if you ignore the little doji bar here, 6 out of the last 8 bars that are pretty bearish. And so we're seeing that the momentum is really covering distance. This is not just a corrective move. This is starting to really pick up some strength. And as I mentioned before, the cat twist happens to be a perfect example because it crashed all the way to the ground. One of the best trades that we've had so far in 2014 is that it just totally collapsed after we saw any momentum down, and we rode that trade out for a few hundred pips with a stop loss that was very small. And the reason that we're able to get into those trades on a pretty regular basis, and again, they don't always look quite that pretty, but the reason we're able to get into a lot of those trades is because we just wait for trend momentum continuation. And it's very simple, it's a very basic concept, but it's amazing how many people are trying these tricky strategies with all this and all that, and they're really struggling. When if you go back to the basics, you look for trends and you define them the appropriate way, and then you wait for the continuation aspects. Again, I talked about how, in an uptrend, there's parts of the trend that are moving up, and there's parts of the trend that are moving down. And if you trade the parts of the uptrend that are moving up, obviously you're going to have a lot better results than if you're kind of flipping the coin and just saying, hey, well, we have an uptrend, let's buy some pound dollar or whatever the case is. So this is the goal right here, to look for opportunities that have enough momentum to continue a trend so that you can ride that out. And what I'm going to get into in a minute, I'm going to go over another example here, but I'm going to kind of go through the math here about what it looks like to build an account using this method, because at the end of the day, you want to build your trading account. That's where the money from trading is going to come from. It's going to come from increasing that account. And so I'm going to talk about why this method, at least in our experience, has really done extremely well for the account growth type of strategies. I think that I can safely assume that most of the people in this webinar don't have 6+ figure accounts or 7-figure accounts, that they're just, basically income trading on, where they're, trading with a standard size and looking for a set winning percentage and trying to make $10,000 a month or $20,000 a month. For the most part, I'm guessing they, we're dealing with smaller accounts, and what you want to do is build that account into something that can provide an income. And so, in our opinion, this is the way to do that. And again, I'll kind of go through some of that math a little bit later. I just want to talk about the idea of momentum quickly, because momentum is one of those words that you can throw out there that a lot of people get wrong. Because, the market moving fast is not a definition of momentum. You see the market whipping around, and you say, oh, look at all this momentum. Well, that's not really momentum. Momentum is not for there to be large candles on your chart. That's one thing, and that's good, but if it's not covering a distance or a range or a price, then there's really no momentum to be found. It can go up and down all day. It's really not going to move the market in any way that you can make money. So what we need to make money is momentum, and this is an example of what momentum really is, because then the market is actually covering a distance. So we want to trade this kind of momentum where there's directional, purposeful movement. Sometimes I like to say the market's on a mission. The market really looks like it's trying to go somewhere. And those are the moves that I want to get involved in, because if you know anything about trading, or if you have any experience in trading, you know that the market can mess with your head. It's up and it's down and it's back and it's correcting, then it's continuing and it turns into a pin bar after you thought you were up huge, and it just toys with you. But when you can catch these, a little more rare moves where the market's really building and attempting to cover some ground, then that's where good profit comes from. I wanted to give you another example, because I gave you kind of our best example of recent past few weeks. So I wanted to give you a little uglier example, just to show you that you can win trades other ways, and it doesn't always look quite so pretty. This is the euro pound, and you can see that, again, our indicator up in the top right corner is telling you that the trend is bullish, and yes, it's confirmed, meaning that not only is the trend bullish, but we're looking for an upswing opportunity where, it's kind of going to make a new leg of the uptrend, like we talked about before. So what happens here is that there's an up move, there's some consolidation here. It's enough to draw that rough bearish trend line that we talked about, and then what happens is it kind of falls down and then surges back up, and there was some news involved here, as you might imagine, with that huge spike there at the end. But what you'll see is that after those initial touches that I'm showing you on this past shot here, we get a consolidation that kind of drops down, and so it's really easy to take your eye off this opportunity. But what we know is that the trend is still bullish and it's still confirmed to the upside, so we're not giving up on this trade opportunity. So again, it's not quite as pretty as that Crad Swift, but we do get a really massive break. And then what happens is that it still is not showing any momentum here, at least according to our calculation. Now, I would still be okay with taking this trade. There's obviously a lot of strength in this move, but we have this handy tool that we wait for that lets us see momentum, and it looks like that, so we don't get it until the next candle. And this is a really good example of where some traders get hung up, because what they'll say is, wow, you got in way late on this trade. And ordinarily, you might say, well, it's our stop loss is going to be all the way below that consolidation. We have a pretty wide stop loss, and I don't like wide stop losses. I'd rather be able to get a tighter stop loss and really maximize that risk reward. But what I know about this pair is that the trend, the upward trend above what I'm looking at now, is still bullish. So even if I'm in, quote unquote, a little late, I'm still going to be able to have the opportunity to leverage a really large trending move. And so I'd rather get in late with this, big trend on my side and that opportunity than to get in early and kill my winning percentage and not really be able to take advantage of any of those, those trending moves. And then if you look, what happens is after this, we do get a little bit of consolidation, and oh, there's my marker finally showed up for some reason. We do get a little bit of consolidation after this move, but it continues to move up. And actually, we were still in that trade. I think I took the snapshot a few days ago. We were still in that trade for a good while, and it turned out to be a really good trade. And then we even added a position on another break to take advantage of the continuation of the trend. So even though getting in down here was possibly not the best price that you could get in, it's okay because this trend continuation method is able to carry us a lot farther than what your typical hourly strategy or whatever you're looking at has. And that's something that we find that's really common with traders is that they go online or they go to a presentation, they look at an hourly strategy or whatever the case is, a 15-minute strategy, even a daily strategy. But that's a pretty narrow view to look at the market and say, oh, I'm an hourly trader. Well, unfortunately, whether you like it or not, the market is a lot more than an hourly market. So to disregard what's happening on other time frames and other views is a really narrow way to look at the market. So what we do is we capitalize on the longer time frame type of trends, the ones that have really big power, and then we look for these precision entries. So to an hourly trader, they'll say, oh, that's a late entry. But to a daily trader, we're getting in really early and taking advantage of a huge potential daily move. And that's the entire goal of this strategy, is to be able to take advantage of trends that are above us, that have more power than what we're looking at, and capitalize on their leverage and their ability to move the market in a huge way. So now what I actually want to get into is kind of the math about how this really works, because I want to show you how it can build an account, not just provide winning trades. Before I get into that, I just want to confirm everyone's on the same page with me, and you kind of get where I'm going in terms of leveraging these trends to make these trades. It's not just about an entry rule, but it's about leveraging a trend and leveraging the power of the market behind you. Everyone tracking with me? Am I making sense? All right, cool. All right, well, we've already gone 30 minutes. It's crazy how time flies when you're talking about trading. I could spend 2 hours on each section, so let me move forward. So what I want to ask basically is, what makes this really powerful in terms of leveraging a trend? That's great. Hitting winning trades is really great and everything like that. But what makes it really powerful? What is so special about this? And the answer, as I've already mentioned, is the idea of building an account, because at the end of the day, every trader wants to build their account. And what we found is that this concept of leveraging the trend and using the trend is the absolute best way to build your account. And AJ, that's a trend determination. We have a tool that does it for us, but if you don't have that tool, a 34 EMA and 136 EMA are a really easy way for us to define a trend. So what I actually want to do here is see if I can draw for you, because I like drawing. I think it's the easiest way to really make sense in some math and show you that. But I want to make sure that you guys are able to see my marker. If I draw here, I don't know that you're able to. Is everyone able to see if I use this marker so I can kind of show you what I'm looking at? Okay, cool. That's good, because I'm a marker person. I do this all the time when I'm training, and it just makes it easier for me to put my thoughts out there. So basically, there's a few different, and there's probably a million different ways to approach the market, but I'll basically say three. So the first one is basically to say, okay, oh man, this marker's lagging, so this might not work as well. Here, let me do this. Okay, so you have scalping, and then basically you have your regular intraday trading, and then you have what we're talking about, which is using the trend and the momentum, the combination. And here's what happens with scalping. Typically, you have a negative risk reward, and you're looking for a really high percentage win trade. So maybe you have like a 4 risk to a 1 reward, which is pretty common for scalpers. And then for intraday traders, you have normally like a one-to-one type of a trading strategy where you're looking at a 60-minute chart. You might have a 50 pip stop and a 50 pip target, and you're looking at that one-to-one. But what I think what's powerful about the trend of momentum is basically you have a one risk, and you really have kind of an unlimited reward potential. I don't want to be hypey about how much, you can make millions of dollars, but the advantage to using these trends and riding these trends is that you have the ability to really hit an unset type of reward. Most of our traders, like our mentor group of traders, who's kind of our close-knit group of traders, are not trading with a target because they're using the trend and they're leveraging it, and what they're doing is they're basically saying, I don't want to cap my profit potential on any given trade. If I get the trend right, I don't want to cap that opportunity because who knows? I might catch that 2,000 pip move. That's certainly not going to happen on any kind of regular basis, but if you do, then you're talking about amazing account growth, which is our goal. So with a scalping strategy, you might take, let's say, like 100 trades in a month. And then with an intraday strategy, you might take like 30 trades in a month. And then if you're being really specific and you're looking for these good trending trades, you might take like 10 trades in a month. And what happens is that they all kind of balance out in different ways. Obviously, if you're trading a scalping strategy and you have a negative risk reward, you're going to be able to hit more winning trades. So let's say that you're able to hit like 80% winning trades, which is very rare, but then you're hitting 20% losing trades, obviously. And for the sake of making things simple, we won't go into break even and partial reward and all that kind of stuff. But we'll just say it's 80-20. And then with the one-to-one, we'll say, we'll assume that it's a profitable trader and they're hitting like, 18 and 12 type of trading, which is extremely good. And then for our momentum, where you're looking for these trends and you're looking for big opportunities, we'll basically say you're hitting a 50-50, and you're winning 5 and you're losing 5. So they kind of all balance out in terms of the way these strategies work. But here's what makes it really powerful, and I'll explain this, and I'll kind of go back to make sure that everyone is following what I'm saying here. But let's say that on this strategy where you're scalping, that you're basically, risking like a smaller amount. To take 100 trades in a month, you can't be risking too much. Let's say you're risking like 0.5%. 0.5%, then you would, on 80 wins, you would win 40%. Oh, excuse me, I just did the math wrong. Whoops. That's on 20%, I'm sorry, you would lose 10%, and then because you're only getting 1/4 of that, basically you're saying, okay, I'm going to get 80 trades, but they're only going to be worth like 0.14, 0.15, or whatever per trade. And we'll be generous and say that you net a 15%. So that you're actually +5 on that side, which is a little bit generous, both on the 80% and what your profit will be. But just for the sake of argument, we'll say that's what your winning is. And then if you're an intraday trader and you're risking like 1% because you're taking 30 trades, you win 18%, you lose 12%, and you could potentially make like 6%. And those are great things and good numbers, and I think that would be very generous for the average trader. But what makes this really powerful is that if first of all, you're taking less trades, you're going to risk a little bit more. Most of our traders with 2 or 3% who are being selective about their trades. If you're able to really ride a trend and add positions, then you can take, one of these trades that you enter in January, and over the course of 2 or 3 months, and you can ride out a trend, you can hit, a 25% total position. And again, you're not going to hit that in a day of trading, but if you're riding that out throughout a few months and you get that big trend, then you're really talking about the ability to build an account. Because what happens in these other trades, you make 6%, and then you have a losing month and you lose 4%, and then you have a winning month and you might win 5%, and it's very difficult to balance out. And eventually you're kind of a back and forth type of trader, and maybe you're even slightly profitable, but it's very difficult to really build an account. Whereas if you're able to use this method and capitalize on these types of moves, then all of a sudden you can take advantage of these trends and really look for account growth opportunities. And for anyone who wants to grow their account, to do a scalping type method or on all that kind of thing, or an intraday method even where one-to-one, you're required to win this high percentage and be so consistent and not have losing months so that they don't drag down your average and killing everything that you're attempting to do. You can use a method where a single trader, I should actually say a single set of positions, because you're taking advantage of a trend, a single set of positions can legitimately grow your account, which of course can, affect the amount of money that you're making long term, because you can trade on a $10,000 account and make a few $100 here and a few $100 there, but if you can build that account into a $100,000 account, then all of a sudden you can really start making money. And so in short, here's what that looks like. Because we're already running out of time, I'll just kind of give you the short version of what our traders attempt to do. So let's say that the market begins moving to the upside, and you have a couple hundred pips, and of course for a while it's just going to be the beginning of a trend. You don't really have a qualified trend. Then it's going to take a while for that trend to be confirmed. But once it's confirmed, then you're going to have something where you're looking like this, and you have your typical trend moving, and it probably won't look this pretty, and if it does, then just start trading that instrument. But it looks something like how a trend always looks with higher highs and higher lows. What many traders are doing is they're trying to look for positions inside here and inside here, and they're looking for these positions, and they might win some and they might lose some, and they're trading in between, and that's great. And again, that can make you money. That's fine, and there's nothing wrong with that. But if you can take an opportunity where after this trend's confirmed, you get into the market here and you leverage this trend, and all of a sudden you're up in profit, and then you can hold out, and this pullback doesn't mean anything to you because you know where the trend is, and then it continues, and you're able to add a position, and again you get pullbacks, but you know where the trend is, and then it continues, and you're able to ride a trend because all you've done is say, okay, I know the trend's up, I know that every pullback has a likelihood of a continuation. Then when this trend finally reverses, which some reverse earlier than others, you have the ability to have multiple positions stacked within a trend where, again, your account in one set of positions. Now, it's going to take months, okay, just to be clear. These trends happen over months. It's not a get-rich-quick scheme, but over a period of months, you can hit a 20 or 30 or 40% type of account growth opportunity and have a legitimately larger size account to begin doing that with the next time around than someone who's making $100, losing $100, making $80, losing $50, and going back and forth and struggling to build that account. And so that's exactly what our method attempts to do. It attempts to capitalize on trends, get you in after you know where the trend is, and then you're safe. You have a head start in the position. You know exactly what the trend's doing. You know what tells you when it's going to reverse. You know when to get out, and you have the ability for a huge account growth type of move, and that's exactly what the goal is. I can't believe that it's already like 8:40, so I'm running out of time. I wanted to get to questions by 8:40 in case we need to go back over the strategy. Before I do that, let me pull up the presentation and show you an important thing, and that is the strategy report that I mentioned at the beginning, because I want to make sure that anyone who's serious about using this method and understanding how to, capitalize on trends gets this report, because we talked, just for a few minutes basically today. We hardly got even into the subject matter of really what you can do. But I want you to download that report. There should be a link. Let me grab it in case I don't have it for you. But that's the link. It will give you free access to that report. And also, actually, if you download the report, you can have the opportunity so that you can get that indicator that we talked about that includes the trend definition and all of that. So that's the report. It goes through that step-by-step process. It'll kind of explain to you a little more detail in terms of what entry rules are for the strategy and all of that, because again, I know that 40 minutes to describe an entire approach to trading is a very short period of time. But yes, it does work in all different types of markets because it's just a fundamental price-based strategy. It's not, it's not based on a specific currency pair or anything like that. It's based on price and how market structure works. And so it's very effective for all different types of market conditions, which is why we like the strategy so much. We've had, people be really successful just with this basic understanding of capitalizing on trends. And it's so easy to get caught up in all the indicators and the strategies and the entry rules and all the things that are out there. People forget that just defining a trend and being patient enough to ride that trend is where real money can be made. And that's what, what you see if you look at past traders, what most of the very successful traders were. They took advantage of huge moves. And then that was obviously what yielded really good account growth. So yes, Judy, it does work with stocks, and again, it works with any market because it's a structural market type of strategy. And so just to go over those EMAs, I know I got some questions on the EMAs. The 34 and the 136 EMA, if you do a high, low, and a close, that basically puts a wave on your chart, and that wave is how we define the trend. If it's above both of those waves, we're saying, okay, it's an uptrend, it's a confirmed uptrend. If it's below, we're saying it's a confirmed downtrend. And then if it's in the middle, then that means that we're not quite ready to make a trend. It's kind of in a dead zone, which is where a lot of retail traders spend their time trading in those dead zones where it's extremely difficult to make money. One of the biggest problems that traders have is they're just trading untradeable zones where no one's making money. And so it's a problem before they even, have figured out all the other problems that they have with trading. They've already started with a fundamental problem. And so we use a lot of things. People are asking, in terms of candlesticks. Yeah, we use price action, we use candlesticks, we use fib levels, we use all these other things, but it's all based on the fundamental strategy so that there's not just, a set of rules that don't lead to anything. You're actually building it on market structure, because market structure is what leads to the ability to trade profitably, not just a set of rules. Okay, so it is 8:45, so if there are questions about the strategy, I will help walk you through those. In terms of looking at momentum, we have a tool that we use. It's called the SMI. It's a really cheap tool that we saw on our website that shows momentum. But there's an easy way to look at momentum, and that is to basically look at what the average candle is doing. So if you have basically what you call an ATR, what the average candle is moving on a chart, if the direction of the trend that you're looking for is bullish, then you'll say, okay, this set of candles that's going in the bullish direction, 6 or 8 or however many candles that is, if all of them average out to be higher than the average candle on the chart, then we're calling that momentum. So if the average candle is 6 pips, and then you have 8 bullish candles, and those 8 bullish candles make up like 80 pips of movement, then what you're saying is, okay, there is enough bullishness here, there's enough momentum here that this can carry this trade through to the upside, which is a very easy way to say, okay, yes, there's momentum here. And again, to determine the trend, it's a 136 and a 34 EMA. And so if you put the high, the low, and the close on that, they correlate very well with how a trend moves, because what they do is it's a good balance between not being too loose and letting the trend totally reverse and you still think you're in an uptrend, and also not being too tight where every pullback it says, oh, get out of the trend, it's reversing. So there's a really nice balance there that allows you to trade the trend pretty effectively. And yes, EMA is exponential moving average. What we do, SP for the trend, is we'll say, basically we're looking at daily and 4-hour type trends, and then we're capitalizing on those on smaller time frames. So like hourly and 15-minute type entries. The high, low, and the close. Okay, if you're putting an EMA on your chart, I don't know how common this is outside of other markets other than the currency markets, to be honest, because that's what we trade. But in the settings, you can have how you want to set your moving average. You want to set it based on the highs of the candles, the lows of the candles, the opens of the candle, or the close of the candle. What we do is we do one for the high, one for the low, and one for the close, because it gives you a little bit better picture of how the market's moving rather than just one line. So that's all there is to it. Yeah, we put all three lines out on there for a quick definition. Now again, I use a tool that runs in the background that shows it to me, so I don't even have those moving averages on my chart. But that's exactly what it is. It's just having those three averages and then looking at where price is in comparison. Cal asked about back testing. Yeah, we do a lot of testing, Cal. We basically treat our trading company like a lab all the time, where we're looking back and going through different things, testing stuff, and all kinds of different variations of trade management, trade entry rules, and all kinds of things. And yeah, there's 6 lines, there's 6 moving averages technically on a chart. Now they run close together because it's the same moving average with 3 different settings. So you kind of have one wave and then another wave. It's not 6 random lines. Paul, we use the daily trend. The weekly trends are good, but typically what you'll find is that the weekly trend is just too much to get a handle. In other words, your trend definition might define that the weekly trend is in an uptrend with a 1,600 pip pullback potentially in that uptrend. That's just too much. So that's what we go with, the daily and the 4-hour, a lot more than what we look at for like the weekly. So that link there, I just pasted that in. Basically what that is, you can click there, you can opt in, and the report gets emailed to you. So it's hosted online actually, but it's emailed in the link for you. And it's 6 steps. It walks you through very simply. It's not a complex strategy. We try to stay away from complex strategies because people struggle enough with simple strategies because the market's very tough. So to add a hyper-complex set of rules with an already very difficult market is not the most effective way to trade. Vic asked a great question about support and resistance. I actually wanted to make a note about that, and I forgot. So, Vic, I appreciate that. One of the great things about trading with the trend is that support and resistance become less of an issue. Now, that's not to say that we don't look at support and resistance, we don't draw levels on our chart, but the whole function of a trend is that it creates a level, and then it breaks that level, and then it creates a level, and then it breaks a level. So the trend itself, in order for it to be a trend, is constantly breaking through, all kinds of barriers and stuff in its way in order for it to be a trend. And that's one of the reasons that trading trends is so great. Yes, you're still going to get, price that bounces off support resistance. It's going to stop you out. It's going to do all those brutal things that you don't want the market to do to you. But it's a trend. It can power through, and half the time, you'll be in a trade and you don't even realize there's a support or resistance level in the way that maybe another technical analysis will be say, hey, watch this resistance level. But because you're with the trend, it might slow down, it might respect that level, but it breaks right through it, and you're 300 pips past that support or resistance level. That's one of the best advantages to trading with the trend, is that the trend by its nature breaks through support and resistance all the time. And Trevor, for a trend setup, basically, in short, what we talked about today was anytime there's a counter trend move, you automatically know there's a possibility for a trend continuation. I mean, that's all there really is to it. Now, there's details within that of how you want to set that up, and our report kind of goes into that. But as far as trading with the trend, anytime the market is going against a strong trend, you know that you have a better price in the direction of the trend. You better start looking for an entry. Ricky, there's so many fundamental things going on at once. More often than not, we ignore most of those fundamentals and we stick with the technical analysis. Fundamentals for me are not critical. I like to follow those fundamentals, and I like to complain about the United States government and all those great things. But I don't put a lot of stock in the fundamentals, specifically because sometimes bad fundamental news strengthens the currency. Sometimes bad fundamental move weakens the currency. Sometimes a hurricane in the west does nothing, and then a hurricane in the east makes the market go crazy. And there's all kinds of different things that that the market doesn't really react to on a consistent basis. So it's hard to make any trade moves based on that. But again, just going back to the basics, if you use the trend method that we talk about, then it settles things down a lot for you. You don't have to worry about most of that. You're able to stick with the technical analysis, and then it's a lot easier to look for what you're looking for. And John, to answer your question about the EMA crossover, basically, if you have those set of indicators on your chart, we'll wait for the faster moving average for price to close below the faster moving average in an uptrend, or below it or above it in an uptrend. And basically what we'll say is, okay, now the trend might still be up overall, but it's not confirmed anymore. So we need to wait for it to get back up in order to confirm the trend. So we use that slower moving average, that 136, to define the overall trend, but we use a 34 to make sure that trend is really moving in that same overall direction, that they're in sync with one another. We use all kinds of time frames, Randall, but typically it's an hourly or a 15-minute type of entry where we're looking to follow along with a 4-hour and a daily trend. So that potentially an hourly break with a 50 to 60 to 70 pip stop loss has the potential target of several hundred pips and a very good risk reward, and that's what we're going for. All right, guys, well, thank you. Thank everyone for your attendance, and really appreciate it. The indicator, by the way, that I mentioned is for MT4, which is the very common currency trading platform. That's the only platform that it works on as of now. So potentially in the future, we'll add it to other things, but for right now, it is a MetaTrader 4 plugin, and that's it. But I appreciate it, guys. I know that we didn't really get into a ton of detail, but I hope that you kind of got this concept of what the trend can really do, especially when you're able to leverage it with entries that make sense. And so I appreciate all you guys, and thanks again, Steve, so much for having me and allowing us to talk to your group.
Nathan, thank you very much. Very good information, and very good information because, like most investors need to have, it keeps it simple. So you don't have to have complicated strategies to make money.